The committee noted that the increase in the level of external reserves would further build confidence for a more stable exchange rate and thus urged the bank to explore available avenues to improve inflows, especially through diaspora remittances. In addition, members noted the efforts of the federal government and private sector towards improving domestic refining capacity, as this is expected to reduce foreign exchange currently being expended on the importation of refined petroleum products. The MPC noted the sustained resilience of the banking system, reflected in improvements of key financial soundness indicators. Members further encouraged the continued need for close monitoring of the system as the implementation of the recapitalization exercise progresses. To consolidate on the gains thus far achieved, the committee re-emphasized its commitment to stay on course with its tightening cycle in view of the urgent need to address inflationary pressures. Key developments in the domestic and global economies. According to the National Bureau of Statistics, domestic headline inflation rose marginally to 34.19% in June 2024 from 33.95% in May 2024, driven by the continued rise in the year-on-year components of food and core inflation. Similarly, month-on-month headline inflation rose to 2.31% in June 2024 from 2.14% in the preceding month. The food and core components rose to 2.55 and 2.06% in June 2024 from 2.28 and 2.01% in May, respectively. Real GDP year-on-year grew by 2.98% in the first quarter of 2024, compared with 3.46% in the fourth quarter of 2023, driven by both the oil and non-oil sectors. Staff forecasts, however, suggest that the domestic economy will grow by 3.38% in 2024, while the IMF has projected growth at 3.1% in 2024. As of July 18, 2024, external reserves stood at $37.05 billion, compared with $34.70 billion as at the end of June 2024. This represents 11 months of import goods and services cover. The global economy, according to the IMF, is forecast to grow at 3.2 and 3.3% in 2024 and 2025, respectively. Headwinds to the global projection remain the tight global financial conditions, and ongoing geographical tensions associated with the wars in Gaza and Ukraine, both of which have significant impact on commodity prices and the global supply chain. Global inflation is forecast to continue to decelerate marginally in 2024, but may stay above the long-run objectives of most advanced economy central banks. Global financial conditions may, therefore, remain broadly tight through 2024 and into 2025. The committee reaffirmed its commitment to continue to monitor developments in the global and domestic economies to guide policy and ensure that inflation expectations are adequately anchored. The next meeting of the committee will be held on the 23rd and 24th of September 2024. Thank you.
Thank you, Mr. Governor, sir. That was Communique 3, presented by the chairman of the MPC and the governor of the Central Bank of Nigeria, Mr. Olayemi Kadusu. We will now take questions from the members of the press. Remember to state your name, your medium, and you ask your question. You are entitled to just a question. Thank you.
Okay, good afternoon, Mr. Governor and members of the MPC. I am Nancy Naji, the anchor of Moneyline with Nancy on AIT. Mr. Governor, I think mine is pretty simple, but I will start by asking you to reiterate the rates again, because it seems we're a bit lost we didn't get those rates, so please do that. The simple question to you really is, you had a forum recently in Lagos, and there you reiterated as a policymaker your commitment to getting average Nigerians on the streets, solving their problems. But Mr. Governor, we are also on the streets. And many Nigerians are reeling. That average Nigerian you mentioned are really now severely hurting from the impacts of inflation. So my question to you is, Nigerians also are questioning and are skeptical about the measures that the central bank is taking will it really address the issue and also fix the problem? So, Mr. Governor, for those watching now, for those listening, I would like you to, perhaps tell Nigerians why this is still on. Thank you very much.
Thank you very much, Nancy. Again, let me just reiterate the committee's decisions on the rates. The committee's decisions are as follows. Raise the MPR by 50 basis points to 26.75% from 26.25%. From 26.75% from 26.25%. Adjusted the asymmetric corridor around the MPR from plus 100 to minus 300 to plus 500 to 100 basis points. Retain the cash reserve ratio of deposit money banks at 45% and merchant banks at 14%, and retain the liquidity ratio at 30%. Okay, now to your question, which is a very valid question, and I think you're probably referring to an earlier submission. I think it was probably at a business day seminar, I believe, where I said, and really I merely reiterated a position I've always held on to, and that is that as policymakers, indeed specifically as financial and economic policy makers, it is very important that we bear in mind the impact of our policies on the man on the street, on the average man on the street. And why did I say this? Because many times as people in finance, economics, some could be criticized for living in a bubble and being completely disconnected with what happens outside. And from my perspective as a policymaker, that is a failure. Ultimately, if we're doing all the things we're doing and we're not able to impact the man on the street, ultimately, then what do we really say we've been doing? And I think sometimes when people look at figures too often, they may lose track of that. And that is why I said what I said, that it is so important that we continue to bear that in mind, that our policies must ultimately impact the man on the street. I hear you about the issues you've referred to, Nancy, but I think to adequately address that, it may be important to cast our minds back, okay, and ask ourselves, how did we get to where we are today? Okay, how did we get to where we are today? How did we get to a position where the central bank is using the policies that you say you are wondering whether they are having their impact? Now, let's not forget that over a period of time, we've had an economy and have failed to diversify that economy. We would argue that the Nigerian economy has basically been a monolithic one in which we've more or less depended on one source of revenue. Now, of course, a monolithic economy has its own risks. And part of those risks, of course, is that if anything happens to your dependency, then the whole system gets shaken. And I guess in many respects, that's part of what we're going through. Part of it, it's not all, it's certainly part of it. Because let's not forget there are global headwinds as well. So it's part of it. And that going forward, we must ensure that we are able to craft policies that are sustainable, okay, and will bring a sustainable method of development for our people. There's no point in policies that are ad hoc and don't really take us to where we want to get to in the long term. Because in the business of policy crafting, we must have the long term in view. You don't have the long term in view, you end up paying for it later. So that's where I was coming from. And that such policies, of course, must take into consideration inclusiveness. And that is why at the central bank, the issue of financial inclusion has been an area of great focus. And then, of course, it's not just to talk about the policies alone, but the implementing process must be equally robust. And that is where the issue of institutions and strengthening institutions is relevant. No matter the policies you craft, if the institutions are not there to support those policies, then you will suboptimize. And again, from the central bank's perspective, that is very, very important. It is very key. Now, these things have to go hand in hand. There's no issue of, doing one and expecting the other to follow. They have to go hand in hand, the crafting of the policies, the implementing of the policies. And of course, we also have to bear in mind that in the process, given the background I've just mentioned, some of these things, of course, have been with us over a period of time, with the result that the economy has suboptimized. So in the short term, we may find that some of the policies being implemented may appear stringent, but I can assure you that into the medium and to the long term, definitely they will put us on the path of sustainability, which is important, please. It is very important, and that's why I made reference to it. We must focus on sustainable development. We are also finding, and I think this will become more apparent with time, that our policies are beginning to cascade down and up because there's a period for transition mechanisms to have impact. But we find that gradually they are beginning to turn a negative corner. Okay, bit by bit, it's moving in a relatively more positive trajectory. We will continue to ensure that, like I said earlier on, the process of implementing policies are those that we are very vigilant on, and that we ensure that those who play in the area that we supervise play by the rules, because that's also very, very, very important.
Thank you, Mr. Governor. My name is Isab Wahab. I write for New Telegraph newspapers. As you rightly noted, inflation is still trending, 34.19% in June. What is the bank assessment of this impact on the households and the monetary power, and what's being done by the bank to stabilize the economy?
Thank you very much, Musa. Clearly, two areas that pose a challenge. One is in the area of food inflation, which we all know is been a bit of a challenge. And the other, of course, is in the area of foreign exchange and its own pass-through. Now, with respect to food, I would say that, and we said it in the MPC communique, that we notice the moves by the fiscal side to help taking on certain policies that are helping to moderate food inflation, and we very much are encouraged by that. So we are hopeful. Don't forget that a while back we also made a donation of fertilizer, which was also given in with the view to help the situation going forward. On the foreign exchange side, because we all accept the fact that the foreign exchange pass-through is very significant, and I'm happy to say that we have seen positive outcomes from the tools that we have been using over the recent past. For example, exchange rate has converged, limiting the opportunities for arbitrage. This is very important. Inflows have increased from 37.93% between January and May 2024 to 38.8%, I beg your pardon, to 38.8 billion. And net inflows, more importantly actually, grew by 73.4% May 2024, comparing this to May 2023. So that's very good news, and something I speak about all the time on the issue of diaspora remittances. And I'm very pleased to say that as at end of June, this had gone up to $2.34 billion in comparison to $1.58 billion for the corresponding period last year. Capital importation, again, between January and June, $5.92 billion relative to $1.77 billion for the corresponding period last year. So that's all very positive, okay, for foreign exchange management. We've also seen that on the capital markets, policies having the capital markets responding positively, and of course the banking sector, we've been very aggressive in giving guidance to the banks with respect to how We want them to position themselves for the future of a $1 trillion economy. Inflation targeting is something that is an ongoing process and which will be given more and more guidance as we go along.
Good afternoon, Mr. Governor. I am James Major with This Day. The real sector players are really, having the heat over the continuous hike in interest rate. They have been complaining. I want to ask, sir, are you having any engagement with them in order to, make them see why this is so? Because the way it is now, some of them are even saying that their jobs are threatened and all that. Thank you very much, sir.
Thank you very much, James. Yeah, the straight answer to your question is yes. We are engaging with them. We've had a number of different fora with them, both in some cases individually and in many cases collectively. And it's something that we will continue to do so to at least explain the reasons why we are taking some of the measures we are taking. However, I think I'll just say one or two things. One is to understand, and these are some of the things that we discuss with the organized private sector, that inflation really and truly is having a major impact on our economy. Purchasing power is getting eroded. People are being pushed into different categories of poverty, and it is in their own interest that we are able to tame the scourge of inflation. If not, the ramifications will also be for them. It's not on the average man alone. It will also be for them. And we understand the need for growth, and we also understand that it is relatively challenging when you have high interest rates. We also understand that. And quite frankly, my belief is that it is so fundamental to the long-term future and stability of our economy that inflation should be brought under control, that in the short term, these are pains which ultimately will be able to help our economy and help the manufacturing businesses as well. However, it's also important to reflect on how we got to where we are, okay? And let's not forget that this was largely as a result of a tremendous amount of liquidity that came into the system in a relatively short space of time, okay? When you print money on ways and means, it has its consequences, and we are paying for those consequences right now, unfortunately. Unfortunately, we all witness a situation where money's supply trajectory got out of hand, and it is, the response to this that interest rates have gotten to where they are in a bid to manage that money supply better and to ensure that things do not spike out of control.
The Governor, members of the MPC, my name is Sunday Michael Ogu. I write for the Daily Trust newspaper. It's been 4 months since the commencement of the recapitalization exercise out of the 24-month period we are looking at. I would like you to give us a better view of how that whole process is coming up. Thank you.
Thank you, Sunday. Let me just correct you, because this is it's a common, what you just said is a pretty common view, but it is much more than 4 months. You recall that in November of last year at the Chartered Institute of Bankers Forum, I actually did say that we were going to get the banks to recapitalize. I did say that at the time. And that was a very clear signal to the banking industry as to where we are going to go to. Since that time, of course, I think it was March, April, where, the specific numbers were given out, but we had given more than enough time for the banks to begin the process of putting that in order. And I must also stress to you, Sunday, that unlike many policies that stakeholders may be used to in Nigeria, in this particular case, we've given adequate time 2 years. So we're telling the banks, don't be in a rush, take your time and ensure that over a 2-year period, you comply with this directive. Okay, so it is considering the importance of this thing and ensuring that we do not push the banks into any kind of stress other than to eventually get to where they should be getting to, especially considering the foreign exchange devaluations and other things, and also giving them enough buffers to absorb shocks. Now, in terms of where do we stand? Well, so far so good. Those who are going out to the market to raise money have begun the process of doing so, and also those who are reporting back to us as to how they are going to do their private raises are also doing the same. So far so good.
Good afternoon, Mr. Governor, and members of the committee. My name is Sarah Chimogu, Channels TV. Just to find out what informed your recent policy on dormant accounts, there's been a mixed reaction in the public space. Thank you.
Thank you very much, Sarah. Okay. Now, I think, but I can't be sure, that perhaps some of the mixed reaction could have come from the lack of or misunderstanding between dormant and domiciliary. Okay, this particular directive is with respect to dormant accounts, not domiciliary accounts, dormant accounts. Now, I don't know about you, but over the years, in my experience, what I found personally is that if you leave accounts dormant in banks, sometimes more than when you don't leave them dormant in banks. In fact, most times, they are more susceptible to fraudsters copying your identity and trying to game the system to grab hold of your money. Okay, so that is a problem that I think most money banks face. And I'm sure if you've been on the receiving end, I have been, then you know that anything that can protect you in the process from these kinds of predators will be welcome. The policy and the directive is meant to ensure that all those monies come to the central bank for safekeeping. You don't lose your money. You don't lose your money. And it's at zero cost to the beneficiaries. All that will happen is that the central bank will manage the monies within our possession. And when the rightful owner surfaces, the money is returned plus whatever income is accrued to you. And I think this should be a welcome development, even from the naysayers, because at a time like this, we recognize the fact that everybody needs every single penny that belongs to them to accrue to them, and not have a situation where you're putting money in a particular place and essentially end up losing it. Of course, it will create liquidity within the system as well.
Thank you so much, Mr. Governor. I have a question from Zaka Khalik, Leadership Newspapers, and I beg to ask the question on his behalf. He said, Mr. Governor, the common man is suffering. From your vantage point as Governor of the Central Bank of Nigeria, what is your perspective on the outlook of the Nigerian economy? Thank you.
Thank you very much to Zaka. Thank you for that question, which is a very valid question and one that we should all be concerned about. Where is this all going to? Especially in an environment where we see that inflation, as we've witnessed today, is still there with us. However, much as inflation is a challenge, we are also seeing some cooling down in inflation. We are seeing some cooling down in inflation. And we expect that as time goes along, that will continue. That will continue and result in a positive trajectory eventually. Again, foreign exchange continues to be a challenge, but I think I've mentioned that we are seeing positive results from the very, very hard work that the central bank has embarked upon over the recent months. Some very, very positive outcomes. I've spoken about the fact that our reserves are being boosted and that relative to last year, we're seeing greater velocity and more inflows coming in, which essentially, in my view, is a question of building back trust and restoring credibility. Because I want to say something here, Zaka. No matter what we do in terms of policies, if we don't have trust and we don't bring back credibility, all those policies will come to very little. So I'm very pleased that at least in terms of the trust deficit that we have had, we are slowly but surely beginning to rise out of it. How do I know this? Apart from the numbers that I've reeled out today, it is also a reflection of what those who make it their business to follow the developments of banks, central banks, world economies are all coming out to say, yes, central bank is on the right trajectory and the Nigerian economy is on the right trajectory. I'll be concerned if that wasn't the case. I'll be very, very, very concerned if we found ourselves going on the opposite direction in terms of the different macroeconomic policies. Some of the other things, debt to GDP, tax to GDP, those are all things that are being fixed on the fiscal side, and we see the efforts that are being made, which both the fiscal and the monetary collaborate. I'm convinced that barring any unforeseen circumstances, and I must say, in saying this, I must also say that CBN, extra vigilant. We will not go to sleep on our responsibilities. We will not. But to emphasize that the collaboration between the fiscal and the monetary side, continuing in the way and strengthening the handshake across both sides is, I'm confident, will take us to a much, much better place where the building blocks will be there and the growth which the organized private sector rightly talk about, they'll find they will have a solid foundation on which to grow the economy of this country. Thank you very much.
So there you have it there. The decision for July has been announced. It's a 50 basis point increase on the MPR, and it's now at 26.75%. The asymmetric corridor has also been adjusted, plus 500, minus 100. The CRR, the cash retain ratio, has been retained at 45 for commercial banks, and for merchant banks is 14%. Liquidity ratio is still at 30%. That's the decision of the MPC of the Central Bank of Nigeria for July 2024. And well, we still have right here, of course, in the studio, our guests. We're having the conversation before that. So it looks like Mr. Jai has won. Mr. Jai, it's a hike, but I forgot to ask you how many basis points.
Well,
I thought you said about 100.
I was expecting between 75 and 100 basis point hike.
So
but,
this
what we
is
got
below.
was 50.
So I mean,
yes.
the MPC is being very kind to the economy. They didn't listen to you.
So, I think they're listening to what the numbers are saying.
Yeah.
The underlying driver. They can clearly see that the risk of increasing further is higher, right? And as such, the momentum of the increase is just about 50 basis points, which for me, yes, it's still manageable. But what we're going to see again is that in the market, they're still going to hold rates pretty much at current level. Yes, they've communicated.
You think it will not reflect in the market?
I don't think market rates are going to react so quick any longer. Look, take for instance, commercial paper issuances, which represent what the private sector is doing, businesses are doing in terms of raising capital, working capital to fund their operation. Some of the issuances we're seeing, discounted 22, 23%. True yield is about 26, 28%. Tell me, if one average business in Nigeria in this period, borrowing at 26, 28%, that is super expensive. And that's not just all the cost the business has to deal with. It has all of the logistical bottlenecks to deal with. And then the consumers are grappling with weak purchasing power. So how do you balance all of that? And that's where we thought that with all of the advancement, advancement seems strong. With the marginal improvement we're seeing around in the inflationary environment, the external environment, and of course, the fact that the work that needs to be done to actually tame inflation is more physical than monetary, we thought that it perhaps might be wise to just hold rates at this current level and allow the prior increases to do some more work.
All right, Mr. Jay, we talked about the place of food inflation, and the CBN governor also did talk about that, and he has promised that there's going to be more collaboration on that to deal with food inflation, which is a major driver of the inflation that we're seeing. But I do wonder what else they can do, let's say for the rest of the year, to make impact, because you talked about the policy lag. The CBN governor also did mention that.
I think before I even respond to that, I mean, based on what's just been said, I do understand the reasons why everybody, wants to have a hold or a reduction in the MPR. But the reality is that we need to think long term. And we need to think about, sustaining what we've already achieved. And I think that is what the CBN or the MPC has just done, right? For us to have a sustainable impact, right? Otherwise, we're going to go back to where we were coming from. Now, speaking about about food, I think it's still a combination of what we do in the physical space and what the CBN does. Right? I haven't seen that much work that's been done in the physical space. Yes, we've spoken about a temporary, withdrawal of import duty on some certain goods item, right? For how long is that going to last for, right? I think we need to think about the real issue. What do we need to do to be able to boost food production in Nigeria? That is what we need. We have so many research institutes in Nigeria talking about yield. I can't even see what they've done or what they've delivered in the past years that we've had them. We've talked about infrastructure, transportation. Now, even if you produce the food, how are you going to take the food down to where the food is needed? We talked about storage. We've talked about how much losses we're incurring. Right? And so we need to focus on infrastructure really and truly, and then see how do we empower the farmers, and how do we keep intact the food that we produce, right? That really has to be the decision that we need to take. We can import all the food that we want, from outside of Nigeria, but that's just a short-term palliative. We need something that is sustainable, and I think that is where, that is what is missing, in this country. We're only thinking about short-term. Let's solve a short-term pain, right? But you cannot use short-term measure to address the problem long-term. And that's an area we need to focus on in Nigeria.
The CBN governor also talked about how we got to where we are. I think he said like twice, if not more, how we got to where we are. And then he talked about diversification. Unfortunately, the economy is still dependent on just oil. And we've been preaching diversification for God knows when. But once again, getting it done seems like a very big deal.
It is, and interestingly, when you look, we need the oil industry to grow, for us to be able to have sustainable growth in Nigeria. And if you look at what the CBN governor did say, he also talked about the fact there's been growth in oil production, right? We need oil production, we need the receipt from oil to be able to grow the rail sector. I mean, when we started the year, our expectation was that we were going to be able to increase our oil production to about 1.78 million barrels of crude oil per day. Our OPEC quota is 1.5 million barrels per day. We're struggling to do 1.5, and that 1.5 includes about 220,000 barrels of condensate, which is not really part of our OPEC quota. So we're not actually meeting our OPEC quota. We're struggling with 1.5. If we can increase our oil production, we're going to see inflow of forex in Nigeria. And if you have inflow of forex in Nigeria, then you can actually give that money to the rich sector to be able to use it to import the equipment that they need to be able to produce. So in a way, it's good for us to diversify, but we still need the oil industry to grow and to thrive. I guess the question is, how do we strike that balance, right? And I don't see it as mutually exclusive anyway, right? What we just need to do is to look at what we need to do with the other sectors, right? But we need our petroleum sector to continue to grow to be able to achieve sustainable growth in Nigeria.
Mr. Keripe, we've had oil windfall before, and it doesn't look like we used it. We used it for, to diversify the economy. I mean, so even when we say, oil was surging, the price of oil was really surging, almost $100, you understand? We did not see intentional plans, to move that. We saw the removal of subsidy, at least at some point. We did not see intentional plans to plow that into the area of diversifying the economy. So, I mean, I wonder how long we'll keep talking about this diversification.
Indeed, there are key sectors of the economy that, in terms of contribution, they might be quite small. Take, for instance, mining. Yeah. It's one of those key sectors where I feel there's so much potential if truly we come to the drawing table with real plans and articulate and really go in there to extract and optimize that sector. That's one. I mean, we talk about technology a lot every now and then. Technology also is another major one. In fact, Nigeria's human capital perhaps is the next oil sector for the economy. But how well is the economy, is government coordinated to optimize human capital? Again, it's not just about optimizing the capital. There's need for education, there's need for training, there's need for upskilling. How well is this human capital prepared for the opportunities that is available in the environment, both globally and even domestically? So there are many dimensions to this diversification conversation, but I believe the body of knowledge available is sufficient. It's just a case of implementation, and then the gap between who is implementing and who is tracking. Right.
Does it sound like a political will kind of thing?
Yes. It comes back to that. Again, there's what we call the lip service. Every now and then we hear, we are working on this, we're doing this, this is the plan. Then 24 months later, there's no traction. So where really does the will, the power lies to ensure those policy initiatives are pushed through to the stage of implementation, really?
So, I mean, we need to talk about the Naira in all of this. It's at the beginning and at the end of it. We've seen a lot of intervention, and I've heard some analysts say it's not a worrying factor that the central bank is intervening in the market, especially when we see our external reserve increase. That means that, I mean, they have the capability to be able to intervene. But, I mean, there are others who have said this is not a sustainable style, having the CBN intervene in the market to stabilize the value of the Naira, and it all goes back to inflation and purchasing power of the people.
It's a chicken and egg situation, really. We are not that economy where the CBN would totally stand down from coming into the market from time to time to provide liquidity, stability. We're not yet there, right? So I will not say it's out of place for the CBN to, from time to time, come into the market and provide stopgap liquidity in terms of FX. We need it. If not, we'll probably see price levels again skyrocket out of hands, out of control. But then the major challenge is what are we doing to ensure long-term sustainability, to attract capital into the economy. We talk about foreign direct investment, which is where I mean, the real conversation should be. How do we attract long-term foreign direct investment into the economy? There are so many initiatives around this, so I'm not going to be reeling out some of those initiatives. It all comes back again to the policy environment, really. Take, for instance, all that's been happening in the last couple of days.
I know you want to talk about Dangote.
Yes, around oil refinery in Nigeria. Where do you place that? If you're an external investor and you're looking at us as an economy, how do you place that? How do you interpret that? What do you make of that going forward? So the policy environment just has to come up with a lot of clarity and stability to ensure that trust, which is one of the elements
the CBN governor actually talked about credibility, trust.
I don't want to go into the conversation of social trust and how much that has been broken and what needs to be done. But I think it all comes back to that at the end of the day, really.
Mr. Jai, I think we'll end on this note. How do we get back this trust? I think the CBN governor sounded kind of confident that it's being regained. I don't know if you agree with that and how perhaps we can accelerate that, gain of trust.
Well, it's difficult to say, whether the trust is being regained, especially when you look at the happenings in Nigeria today. I mean, it's difficult to make that point. I mean, Nigerians are suffering. I mean, that's a fact. So, I mean, you just have to look at the man on the street to see how tough it is for them. I mean, I was speaking to someone the other day, how many people can, even if you have an emergency purchase of 10,000 naira, can afford that? That tells you the extent, of the suffering Nigerians are going through. It's going to take time, to trust, especially when you say, come into government and you say, we've removed subsidy. Of course, the price of crude has gone up. It's now about $82. Subsidy has gone up again to about 5.4 trillion naira. That's the extent of the subsidy that we have. Prices are going up. And so when you said you removed subsidy and there's still subsidy, so where's the trust going to come from? And I think this is where we've got to have a government that really listens and engages with people, right? I mean, in terms of what needs to be done to improve the quality of life in Nigeria. When we do all these things, I think at the end of the day, we must ask ourselves, how do we improve the disposable income of Nigerians? If that is not done, yes, we've spoken about it, 70,000 naira minimum tax. But at the end of the day, is that enough? When you look at the inflation rate in Nigeria, so what would decide, what would determine whether Nigerians will trust is how much they feel in the pain, right? How much of it, is government able to alleviate, right? As long as the pocket is saying something else, then it's going to be difficult for us to regain that trust.
And I guess also, how much is the government feeling the pain with the people? Well. When we talk about cost of governance and hear stories of, other things being bought.
True.
I didn't say anything. All right, I have to thank you both. Thank you so much for your time. Mr. Abiodun Kerikpe, the Managing Director of AfriInvest Consulting Limited, as well as Mr. Wali Ajayi, Partner and Head at Africa Tax KPMG.
Thank you so much. Yes, great to be here.
We'll see what 50 basis point increase does to us in the next couple of months. All right, so that's it. It's been hours of, going to the MPC, going to the market, and of course, in the coming days, we'll have conversations around this increase, 50 basis point increase on the interest rate, what it will do to the real sector, as well as what it will do to debt servicing for the government, among others. I'm Ini John Makwado. Enjoy the rest of the day. I'll see you tomorrow. God's grace.